you. And Ntokozo, the floor is yours.
Great, thank you so much, Ame. And I think that we can get started. My time shows just another minute to go, but I think that everyone waiting in the room, we can get going. Good afternoon, and we are back with another season of the Small Cap Investment Case webinar series. I'm financial journalist, content creator, and social problem solver, Ntokozo Khumalo. And today we'll be taking a look at the investment case of capital appreciation, or if you're looking for it on the JSE, that's CAPRIC, and it's dubbed one to watch and a really strange case, even by the JSE small case, in the twilight zone, that's by Business Live, and has been given props for being able to sidestep the impact of COVID-19 in its latest results by ITWeb. The fintech company continues to see accelerated growth from digital transformation and electronic payments, seeking to serve and or partner with established and emerging financial institutions and other entities nationally and across the globe. Capital appreciation facilitates the provision of financial services, delivering contemporary and innovative solutions to their clients, allowing their clients to not only introduce those services to their own clients. Now they've got blue chip clients, including all major banks in South Africa, Discovery Vitality, Time Bank, and a number of asset managers and retailers, again, both locally and internationally. Now, to help me unpack the investment case of CAPRIC, I'm joined by Joint Chief Executive Michael Pinstein and Bradley Sachs, as well as Chief Financial Officer Alan Solomon. Thank you so much for joining us today, gentlemen.
Thanks for having us. Nice to be here.
Now, I think before we kick right into it, I'd like us to quickly jump through some house rules. We have broken up the session into two parts, which will allow us to get insights from the senior management at Capital Appreciation. But after the first session of questions, we are then going to take those Q&A questions. For all the investors joining us today, you can just pop the questions in the chat, and Ane will make sure that we then attend to those questions when we take a break for the Q&A session. So I think with that, we can get right into it. And Michael, I would like to start this question with you. CAPRIC maintains an uncomplicated, simple balance sheet with no contingent liabilities or post-retirement obligation. The group also continues to be highly cash generative business. Could you start us perhaps by just quickly unpacking CAPRIC's business model for us?
Yeah, so thank you for that. And just very briefly for the investor party on board, as you know, we started as a special purpose acquisition entity, and with a view to investing and growing into market sectors that we had aligned and alerted those who backed us in those initial investment offering in 2015. And it took us a little while, and we had alerted the market to what we wouldn't do rather than what we would do. But when we finally focused, we homed in on this technology and payments services fraternity, and that's where our focus is. We see enormous potential in this arena. We see a very, very significant runway, and of course we've got the as you've seen in our balance sheet and you've mentioned, the capacity to leverage this this runway and this forward position with significant cash reserves, supported by the fact that all these businesses, or the three businesses primarily that are in the stable, are hugely cash generative themselves. And so we continue to build cash availability. And we have a window that takes us into both organic and acquisitive growth with some degree of determination. Thank you.
And I think moving on to you, Bradley, just for anyone who doesn't know capital appreciation and your investment case, could you tell us a little bit about the two divisions that the company is largely focused on and where you really channel your investments and your growth?
Sure. So before I start, I just want to also introduce Michael Shapiro, who's joined us. Michael is part of our management team. He is the CEO of one of our two divisions, which is our services and software division called Synthesis. And he's been with the company for over 20 years and has done an excellent job in growing that business. So I'll start with the services side of the business because Michael's here, and I just introduced him. So we have two divisions, software and services being one and payments being the other. The software and services business and the payments business are connected by the fact that we focus on the same target market, and the target market is the financial services sector broadly, be those banks, be they traditional financial institutions, be they emerging financial institutions, insurance companies, asset management, a whole host of different companies fit under the rubric of financial services. And our payments and services business deal with all of those. As a natural consequence of that, we have grown into other sectors which are adjacent to what we're doing. So for instance, the retail sector. We do a lot in the retail sector on the payment side, and we do an enormous amount on the retail sector in the services side of our business, and include clients like ShopRite and Pick n Pay and Woolworths, etc. So that is the underlying commonality between the two businesses. We focus on the same end markets. We deliver very different services into those end markets, but that is the common theme. Within our services business, we have a number of areas of focus. The one that gains a lot of attention today is cloud. And there are two primary cloud providers around the world that everybody talks about. One is Amazon and AWS, and the other one is Microsoft with its Azure platform. There are lots of other players that make up the remaining 35% of the market, but between Azure and AWS, I think you account for in excess of 65% of the market for cloud services. We are an organization that has specialized by choice in AWS. They were the leader in cloud services and have been for many years. We have tremendous deep expertise and have helped financial institutions and other organizations across the economy migrate to cloud. And the importance of cloud is not because you're just going to save infrastructure costs. It's because of what it allows you to do strategically. And that fits very nicely with the other offerings within Synthesis, digital channels. So how you engage with your customers, how you innovate in a cloud environment where we use the term fail fast. You can try things out very quickly because you can just turn on capability. And if it doesn't work, you turn it off. You don't have to spend months building it. You don't have to spend millions of rands investing it only to find that it doesn't work. So your business case can be more primitive when you try something, and it allows you to back fast tosses versus having spent enormous amounts of energy on a whiteboard and PowerPoint presentations only to find that in reality, it just doesn't have market traction. It also works very well with another one of our services, which is using machine learning and artificial intelligence to get business insights. So while everybody talks about ML and AI, we look for cases where we can apply machine learning and artificial intelligence to give business insights to the C-suite leadership. So we call that our business analytics, business intelligence unit, and they are doing an unbelievable job in growing the offering. And we have a last area of, or two areas, one around regulation, because the financial services sector is highly regulated, and it costs financial institutions a lot of money to comply. And if you can digitize that process, you can remove human capital costs and allow higher levels of compliance. And the last area is in services, where you can derive a capability from the technology which has been deployed. And so those are the things that we do within the services side of the business, ably managed and led by Mike. On the payment side, we have two offerings. One is the infrastructure, because all of us use credit cards, debit cards more frequently now. We're using our cell phone. Oh, you can't see it. I see the virtual background is blocking it out, but I'm holding my cell phone. You can use a cell phone to do contactless payment. So contactless payment is high on people's agenda, and you need to have an infrastructure that accommodates that. So we supply the infrastructure and we manage the infrastructure on behalf of banks and other participants and retailers. And then we also provide payment services. So your journey as a consumer when you make a payment is you pull out your card, you tap it, and you then get a confirmation that the money's been taken out of your account. Well, there's lots of work that happens between the time that you insert the card or you tap the card before that message comes back. And there's lots of data services that attend that transaction that we provide. And so we really do provide a holistic view on payment services. And one of the areas where we've been very, very innovative and forward-thinking is around our product called Halo Dot, which is contactless payment and allowing anybody who has an Android-based device, doesn't matter what the form factor is, whether it's a Samsung phone or it's a tablet or anything that is Android-based, to accept credit card payments without having to buy the hardware. And we started that last year. We launched it with Nedbank. They were the first bank to use it. There was a period of exclusivity which came to an end. We have signed up probably another 4 customers. They haven't announced the launch yet, but we will hopefully be in a position to announce who they are in the not too distant future, who are deploying Halo Dot as a service. And I am very excited that the team got visas to participate in the Money 2020 conference in Amsterdam. And we are looking forward to expanding that offering into the international markets where we've already had some traction. So that may have been a little bit longer of an explanation than you looked for, but I think it was important to give a sense of what we do and what ties it all together.
No, absolutely. And there's definitely some follow-up questions already that I'm seeing coming into the chat, Bradley. So obviously people are keen to have that breakdown of those divisions. But just when we start drilling in a little bit into the numbers, Alan, your integrated annual report showed that cash flow from operations was up 2.5% to just over 200 million. Cash available for investments up 6.6% to just over 538 million, and a 10% increase in annual dividend declared to 5.5 cents. Did the pandemic not affect business at all, Alan?
Alan, you're on mute. You're on mute again, Alan.
It should be at the bottom corner.
Yeah, you're good, Alan. You can go ahead.
We were satisfied in such challenging times to deliver a good performance for our year end at 31st of March 2021. And our recent business update which was released on SENS, reflects a resilient, good performance for our pending interim results, which we'll be releasing on the 30th of November. Nonetheless, our results would have been materially better, not only for the year ending 31st of March, but also for this interim period that we're going to report on in a normalized type of economy for some of the following reasons. Capital appreciation consists of asset light and highly robust cash generative businesses. The group has excessive cash reserves in excess of 550 million, yielding low and reduced interest return as a result of the significant drop in the prime overdraft and repo rates of 300 basis points during the early stages of the pandemic. Furthermore, COVID had a material impact on the restaurant, hospitality, and lower LSM retail sectors during the periods of lockdown. These sectors are some of the key growth areas for our businesses. There were some supply and new project delays in some of our major clients who adopted a wait-and-see approach as they sought clarity of the impact of the pandemic. However, these delays resulted in no loss of revenue or business, but merely shifted revenue from one reporting period to the next or following periods. Our payments division supplies services and bespoke payment terminals to the large banks in South Africa. These bespoke terminals have a long lead time from overseas suppliers, and supply delays have resulted in time and delivery inconsistencies, and therefore our sales of these terminals does not easily follow financial and cut-off reporting periods. There were also supply chain issues relating to microchips. Notwithstanding the pandemic, the group successfully implemented the processes and procedures for business continuity, which will allow us to maximize our performance and results after the world returns to normality. The COVID pandemic did not stop us from further investing into our new and now diversified product range and enhancing our existing infrastructure to meet the anticipated growth in the sectors in which we operate. Capitec had minimal operational impact from COVID as we introduced high-touch remote initiatives who closely engaged with all our customers and suppliers. Thank you.
And Michael, coming back to you, just to add on to what Alan was saying and sticking a little bit to the effects of the pandemic. Did the pandemic, I know it didn't touch so much on the numbers, it actually created opportunities, but did the pandemic in any way disrupt capital appreciation's vision, to develop human capital, to drive transformation, as well as to create jobs, especially within the economic climate that South Africa is in right now?
Thank you. There's no doubt that allied to already difficult economic conditions in the country ahead of the COVID pandemic, this pandemic just exacerbated difficult and challenging times for people generally. It's a hard one to call for the impact on the wider consumer market, the stress, the financial challenges to individuals caught up in both the economic challenges and then the added COVID difficulties is enormous. And one saw that in the early consumer spend indicators, and of course the market reports put out by all of South Africa's major banking groups and provisions raised against default or for default. That's somewhat ameliorated over recent times. There's a lot more confidence that was offset by recent events and anarchy. But overall, the position is better from both a spend pattern and an opportunity. So yeah, the mindset on people has been difficult, and of course we've got to work with that inside of our own organizations and for the markets that we target. Very, very fortunately, our own internal structures were really good, and we were able to improve efficiencies, improve performance from within. People stepped up. Remote working has become a end result. It's with us, and it's something we've got to look to going forward. There's opportunities in that. We've seen really significant efficiencies. And that really relates to our software and services division more than it relates to our payments. On our payments side, there are obvious production and support service initiatives where people need to come into a central arena and attend the workplace. But we too have delivered, despite COVID, really well in those arenas, recognizing that people and families have been disrupted. So we've turned COVID and the economic circumstances into an opportunity. As you pointed out, our business has grown. We're very comfortable with the models. Technology will advance. E-commerce will gather momentum, and we want to participate in all those arenas through our offerings. So we see, as I pointed out earlier on, a runway that is especially positive despite these circumstances.
Because I want to just add something to both what Alan and Mike said. COVID presented a yin and a yang. It was a push and a pull.
Yeah.
For companies that were positioned like ours, companies that could benefit from technology and deployment of technologies, but at the same time, we are a derivative of the momentum of our clients. If our clients slow down, we are going to obviously slow down. If our clients accelerate, we will accelerate. And then we'll have our own path of our own initiatives that run independently. So because we are technology-based, there are lots of things that we do and lots of things that we offer that were naturally accelerated because of the work from home type activities, the remote access to banking, remote financial services, that plays very nicely to our capabilities. People's desire not to use cash any longer or not to accept cash. You've got to go into contactless. So those are the things that were obviously positive. Alan spoke about some of the things that were negative. Lots of retailers shut shop, etc. So we have a portfolio of businesses that on a net basis were a beneficiary as a result of COVID. And I would say, without wanting to be immodest, because of the diligent management that we have, we were well positioned to be able to capitalize on that. You asked Mike a question about our human capital commitment. I'm delighted to say that during this period, we've also continued to hire. Unlike many other companies that had to lay people off or had to ask people for salary sacrifices, as an organization, we were very well positioned. We had no terminations of people because of financial issues, and we have continued to grow our complement. And so I think that's another testament to the way in which our management, and I don't think of Mike, myself, and Alan in that regard, I think of Mike Shapiro and Don and Benjamin, who run the payments division, having run their businesses and done an excellent job.
And just sticking a little bit to, focus on that cash generation, because I think for a lot of businesses, it really is about focusing on that cash generation, especially with the effects of the pandemic. Bradley, we've also seen the cash generation has really come mainly from organic growth, and perhaps this is also an opportunity for Michael Shapiro to come in. But we've also seen that cash generation has also come largely from smaller acquisitions. Could you unpack a little bit some of those opportunities for growth that Capitec not only recently snatched up, but those opportunities of growth in the medium and long term for Capitec?
Yeah, so from an acquisition perspective, we've been a very disciplined team. It's easy to get carried away and just focus on revenue growth. And in focusing on revenue growth, not worrying about the bottom line. I think we've taken a very balanced approach in looking at business opportunities that are strategic and complementary, and businesses that we think have demonstrated market traction, that have long-term potential. And if they do require some investment, we're happy to make it, knowing that we have confidence behind the idea. But Alan, Mike, myself have been around for a long time. Our board has a lot of wisdom on it, and we have taken the disciplined approach because we think there is huge opportunity, and you can't get carried away on market euphoria at valuations that make no financial sense. And so we've looked at lots. I assure you that my day is occupied with looking at many acquisitions. Some have been larger and some have been smaller. We concluded one at the end of last year, beginning of this year, in a business that we think has tremendous promise. It's a company called Layup. It was a business that was a startup, but it was a startup that was showing real market traction in what it was doing, and it digitizes the lay-by process for retailers. And it was primarily focused on e-commerce related retailers, but we thought that e-commerce is easy to solve because everything is on a desktop and everything happens in a contained environment. In a physical retail store, it's much more complicated because everybody comes with a different payment device. The queue is an issue that you have to deal with. And so we've been able to convert the Layup offering onto a point of sale device, which makes it not only available in e-commerce settings, but also in traditional retail environments. And that's very powerful. And so there've been a huge number of transactions and activity in the sector that's generally called buy now, pay later. And Layup is in that sector, in that space, in its own way. So we thought that business had lots of traction. We think it has huge promise in South Africa, and we invested in that. The leadership of Layup is a very enthusiastic group of young, talented guys, and we're going to support them in growing that. So we're not allergic to investing in growth businesses, but we've got to believe in the management, and we've got to believe in the idea, and we have to see that the idea has gained some market traction. And those are the three criteria. Do we believe in the idea? Do we believe in the management? And has the idea gained market traction? And if that's the case, we're happy to support that.
And Bradley, you'll be happy to know we just heard a message from Katiso, who says they are familiar with Layup and it's a very convenient service. So clearly you're getting something right there. And as a follow-up question to the criteria, and as a follow-up question to the criteria that you're talking about, Alan, I'd like to throw it back to you just before we get into some of those Q&A questions that have been coming in very fast and heavy. What is, Brad has kind of touched on to some of the criteria that it comes into what you invest in or what you kind of, go and acquire. But as Capital Appreciation's investment case continues to explore prospects in the technology sector, what is that investment criteria when you are actually deciding to buy into an asset or to buy into an existing firm?
Well, we believe that we have a very strong investment case. I think we've built over the past 5 years an extremely strong foundation in which to grow organically and by acquisition. We have very, very, as Brad has previously mentioned, we are very well managed and compliant businesses. We exercise very strong leadership positions in the industry that we serve, with strong secular growth and trajectory in those industries. We have a strong culture of innovation resulting in relevant client solutions, which is widely requested and in demand by our diverse customer base. The group has already proven itself with an established track record of delivery and service and management of business risks, and have become a trusted partner to a number of blue chip clients in South Africa. And Capric, of course, has got a very strong, healthy balance sheet and supports cash generative businesses that enable growth and agility in sectors that are in the early stages of development and digitalization. And this is supported by our domain expertise and proprietary technologies, which are well accepted in high demand areas. So I think our investment case and the future that holds in a high growth potential sector, not only locally but internationally, is a very, very strong factor in why somebody should look closely at our types of expertise.
Thanks, Alan. Well, we are halfway into our session and we do have quite a few questions that have come in. So I think I'll just start it right at the top. We had a question come in. I'm trying to see the name, but I can't see the name. Full name, it seems like Addison something. Arne, I'm sure will correct me. H. Adam. And the first question is, what is your current debt to equity ratio? And I think maybe I can run through just 3 questions and we take them in a round of 3. So the first question is, what is your current debt to equity ratio? And then the second question that we have from Karabo Setuma is, hi Brad. So I guess Brad, this one is for you. This is quite interesting. How many startups have you worked with as capital appreciation? That's the second question that we have that came in. And a third question that we have is from Katsi, and it says, oh, sorry, that was the comment of I'm familiar with Layup, and it's a very convenient service. The other question that we have from Cheryl Sack is, what is your liquidity position? So it's quite similar to the first question of debt to equity, and then the liquidity question, and how you are working with startups.
Maybe it's because the first question is a bit financial. I'll answer that. We don't have a debt to equity position because we have no debt on our balance sheet. We owe no money at all to any third financial institution. We obviously have creditors in the normal course. We have a very effective cash generating scenarios we've talked about previously. We have very well matched debtor and creditor type relationships with our customers. So accordingly, we have no debt, we have no contingent liabilities, and we we're very pleased to report that we are really in good shape.
And Alan, we do have over 500 million rand of cash on our balance sheet. So that answers the liquidity question. And so that's available to fund both organic growth and acquisitions. And if we needed to, as Alan indicates, we have no debt, but we have a very good cash flow. So we could always raise some debt if need be, if we ran out of our cash, but we don't see that happening in the short term. In terms of so that answers both the liquidity question and also the debt to equity question. In terms of how many startups have we worked with, I would say it's more numerous than I can count. We see a lot, we talk to a lot, and we determine whether or not there's a strategic fit and whether or not we can add value. And we add value by way of relationships with our existing clients. And do we know that a particular solution will gain traction with a client, or does it fit nicely within the service offering portfolio that we currently have? And those that fit within those 2 areas, we make more progress with, and we take those conversations further. Ones that fall outside of that, we're happy to meet with, to explore, but we're also quite disciplined, and then those don't proceed much beyond that.
If we can just go off the financial question, I think what's also significant is that capital appreciation is fully taxed. And secondly, And they've had a very, very strong track record over the last 4 years of very, very healthy dividend payments. We've paid out dividends in excess of 786 million rand, which is about 3.1 times cover. So I think we've got a cash generating and a good policy of, well, not policy, but guidelines in terms of rewarding shareholders.
Before I see we have 2 more minutes before we get into the next questions. So here's another question. Are you exploring new technologies such as blockchain to create more efficiencies and cost effectiveness for clients and the business itself? And then the other one is a bit of a statement and a question. So Karabo says, we have developed an easy payment solution for small business called ePocket app. Before we were backed up by PayFast. However, after some 9 months later, they say we have to run payments via traditional banks. How are we supposed to go about this?
Let me answer the second question first, and then I'm going to ask Mike Shapiro to talk about our Synthesis Labs initiative and some of the stuff that we're doing with new technologies, because that is an area where we spend a lot of time. Innovation is one of the cornerstones of our underlying thesis. So I can't comment on how what the relationship between PayFast was and his company, and how he should proceed, because it's a much more complicated question than the facts as presented allow me to discern. But I'm certainly happy to have a conversation with him offline and see if there's anything that we can do or what the business case is, and do that. So feel free to reach out to me and we can see if there's anything to be done there. Mike, do you want to?
So Karabo, what you can do is you can just drop Ane an email. Ane will drop her email in the chat, and such questions that need just to be unpacked a little bit more with the team, we'll make sure then to get those answers for you from the team.
Yeah, thanks, Brad. And to talk to that question about blockchain and other emerging technologies to make the entire ecosystem much more efficient for our banking and other financial services customers. As Brad alluded to, we have an area inside of the Synthesis software and services part of the business, which is called Synthesis Labs. And that area focuses on all of the new upcoming emergent technologies that really are going to create a tidal wave of change throughout the industry. And very much blockchain is part of that investigative and research and development area. We have a number of internal projects that are running to commercialize that with our banking institutions. It has been quite a slow burn for blockchain to create a commercial use, other than investors buying and selling of Bitcoin. But blockchain from a functional perspective hasn't really gained much traction in the South African market. There are a number of initiatives, and we're working with banking customers. The South African Reserve Bank have an intergovernmental working group called the IFWG, and a number of bank participants are experimenting in the sandbox, and we're assisting them in terms of some of these experiments, but it's yet to gain formal commercial traction. But our labs area is constantly watching. There's a lot of hype around NFTs. There's a lot of movement in that particular area. And our focus is on remaining relevant. So we have a lot of the technical skills in-house. We understand cryptography. We understand software development and integration for banking customers. So Synthesis as a party is very well positioned to deliver on the promise that these blockchain initiatives have spoken of. As we've alluded to in earlier presentations, and I think one of the questions was posed around our Halo product. So Halo is the product where a point of sale device can run on the merchant's own handset, on their own Android handset. And again, this was an initiative that came out of our labs area, piloted with Nedbank last year, and Brad spoke about our 4 other customers, that the launch will happen either towards the end of this calendar year or early next calendar year for that very innovative project. So innovation is at the heart of what we do, and something that we remain very close to, including blockchain technologies.
So the area that I'm very interested in is the opportunities that blockchain presents, as opposed to the blockchain fabric itself. And so there is an area called Stablecoin, which is tying a digital coin to an underlying currency. I think that's very interesting. And we're also very interested in CBDC, which is central bank digital currency. So the Reserve Bank would issue a digital currency that could be used universally across South Africa. And it could be used with other international regulated central banks. And so the Chinese government is very focused on that. So is the Federal Reserve in the United States. And I think that's a fantastic area. And we've got a number of projects that we're looking at in that area.
It's definitely like digital currencies. I don't know if I've quite wrapped my mind around it, but it's definitely an interesting space. You know, crypto and all of that. It's, yeah. So we have 3 more questions before we get back into our session. Any other questions that I don't, if we have time at the end of the session, we'll get into them. Otherwise, as I said earlier, we'll definitely get on May to make sure that senior management does get back to you on those questions. So the next 3 questions we have one from Adam, and again, one from Karabo and one from Adam saying, your share price indicates that you are now back at your November 2015 level of 120 Rand. What type of growth trajectory are you looking at moving forward? And in which geographic locations and regions are you currently operating? And where do you look to expand within the next 6 to 12 months? And then the question from Garabo is capital appreciation. Keen to partner with new payment solutions. Happy to do a presentation.
So the second question's easy. The answer is yes, we're always happy to look at new things, and please reach out to Anna and she'll give you my contact details or figure out how to put us in touch. With respect to the first question, there was a lot embedded in that. So I will do my best to recall the different things. The question is, where are we operating? Today, we operate primarily out of South Africa, but we're providing services in more than 10 countries worldwide. We have taken the strategy of pursuing our clients into different markets, and that is effectively a low-risk way of international expansion. We did, however, open up an office in Amsterdam in the month of August. And we think there is huge opportunities. We have some clients already in Europe, and we're going to continue to pursue those across the continent. In our March year-end results presentation, we also provided a case study of some work that we're doing in Hong Kong. And so we have a number of initiatives in Asia, in Europe, primarily South Africa, and across Africa, working with our existing bank clients in markets where they are currently operational. So I actually think that the number of countries has now expanded to 11 or 12, but we've said 10 countries. I can't comment on our share price, right? It's something which we don't control. We can control the operations, and I think what you can get from this call is that operationally our businesses are performing very, very nicely. We're pleased with, as a management team, with how the businesses are performing. I think our financial results are going to be very pleasing. Though Alan indicated those will be out in November. We have benefited from the period of COVID against all the detractions that COVID brought about, we have been a net beneficiary given the sector that we're operating in. And overall, we are going to expect high growth from our businesses. There was a recent study that came out from Jupiter Research that came out at the end of May, which was sent to me, talking about the value of transactions across the POS estate worldwide is going to continue to increase by an excess of 30% through 2026. That means that's huge. We're talking trillions of dollars, $17 trillion of value going through the estate. The countries or geographies where they think that the highest growth is going to be is in emerging markets where people have historically used physical cash and have not moved to digital cash. That to us is a big tailwind, which is going to drive our business. When we started our payments initiative, we thought that the market opportunity was roughly 400,000 terminals. Today, I think that the terminal opportunity in South Africa is in excess of 800,000 terminals because we have been able to expand the market in which terminals are provided to small and medium enterprises, to the informal sector. There are 800,000 registered small businesses in South Africa that are formal traders. There are about 1.2 million informal merchants. And if you start to think about Halo Dot being available to informal merchants, you think about our new form factors and Android devices, which are available and cost effective for small and medium enterprises, our market opportunity has expanded tremendously. And so we're pretty enthused by what we're doing. And I think our performance to date, growing our state to in excess of 200,000 from 35,000 when we started, is indicative of what we're looking to do. And so we're going out there prosecuting the same strategy that we had. And the strategy was we'll innovate, we'll partner, and we'll execute. And that's been our mantra. And we're going to continue to do that. And I think it stood us in good stead to date. And hopefully we'll be able to report how profitable it's been in the coming months.
And Brad, we'll definitely get back to Halo, because I just saw a question come in from one of our investors around Halo. But I think let's go back into our questions and we'll take the rest of the questions at the end of the session. Just looking at one of your sales reports earlier this month, and the company stated that obviously, as you were saying now, digitization in general and the greater adoption of electronic payments in particular have positively impacted your payments division. And as you just said, in South Africa, 70% of all transactions still settled in cash in South Africa. And it's a similar picture across the continent, really. So where are you seeing that opportunity for digitization in the medium to long term, Michael?
Thank you, Ntokozo. Brad has just touched very emphatically on the growth in the market as we see it. Some of it is a conversion factor from cash, and much of it is a comfort in amongst people more comfortable using technology to transact rather than cash or other means. And this can now be done with a standard mobile or Android device. And so this is taking transactional activity very, very strongly into the informal sector, and in the widest formats of our payments arena, digitalization has huge traction, as Brad mentioned. The other side to it, of course, is that when we look at initiatives that technology can bring, and we think in South Africa of a simple arena like social grant payments and registrations, and the trauma of standing in queues, particularly in COVID conditions, trying to register for a social grant. all of that Synthesis have provided digital solutions to, and where technology can now assist, even in rural, far away and remote areas, people registering for their deserving grants and other means without having to visit centers and transport and all other kinds of obstacles and challenges. These can now be done with using efficient technology interventions. So throughout our business model, digitization, technology, innovative, creative, new initiatives, artificial intelligence, will provide extrapolated opportunities for growth that we are very confident about.
And I think if we touch a little bit back into what Brad already kind of broke down in the first half of this session, zoning in to your software division again, Bradley, what opportunities continue to present themselves there? We've already seen a 7.1% jump in services and consultancy fees, and a 4.7% jump in annuity and income from licenses and subscription fees. What have been some of those drivers for that growth?
Within the Synthesis business,
yeah,
it's the recognition that cloud is not only a means of saving cost, it is the mechanism and platform through which a business remains competitive, drives innovation, and delivers customer service. And so previously I said it allows companies to fail fast, but it also allows them to respond rapidly to changing environments. And so I think there's just a broad recognition that technology is fundamental and a contributor to all sectors of the economy. It's not only the IT sector, it's not only the media sector, it's not only financial services, it's every sector in the economy can be improved through the use of technology. We happen to be in a vertical, financial services, retail. We've also expanded into healthcare, by the way, because healthcare has many of the same issues that financial services, highly regulated, extremely complex, high levels of security, customer availability. So if you're a patient and you want your medical information, you want it now, you don't want to have to wait 24, 36 hours. So the things that affect financial services affect healthcare. So all of these industries are recognizing the demand for the need for technology and its impact that it can have on its business. And that means that they've got to turn to a qualified provider. We happen to be a highly qualified provider. We focus on solving complex problems. In fact, we're best when the problems are complex. We are standard, simple stuff is easy to solve, and lots of people can do that. It's a complex stuff that we do really well. And I think people recognize the benefits that it's having on businesses from Amazon to Netflix across the board. And there's no reason why South African companies can't enjoy those same benefits.
Now, for most of this session, we've really focused on how capital appreciation has been able to navigate COVID-19 and see those opportunities, which is great. But Ellen, despite all those bright sparks that the company has been experiencing, the outlook that you give remains cautiously optimistic about your performance in the coming year or so. Why is that if the pandemic has actually brought on more opportunities for the business than challenges? And what is causing you to actually curb your enthusiasm as a business right now?
You're on mute, Ellen.
There's no doubt that we are living in a very fragile and uncertain environment, both locally and internationally. And accordingly, to make projections and to make forecasts of the future becoming more and more difficult. And it's not unique to capital appreciation. I think all companies are are apprehensive because there are a lot of unknown and unanswered questions. And therefore, accordingly, we've reported previously that we've remained cautiously optimistic in the short term about our future performance, mainly results of what I've been alluding to before, sort of supply issues, and this general macro and microeconomic factors in South Africa, like low GDP growth, investment concerns, and unemployment and the like. However, in the capital appreciation environment, we have a very, very strong demand for our products and services, and lots of committed orders or significant committed orders are in place, and very near committed orders and positions are placed by our customers. Where we have difficulty in our predictions and in our forecasts is the fact that there are delays which sometimes affect the results in one reporting period and therefore will manifest itself in a future timing period. But one thing is significant, that we've never lost any business or lost any orders. There's just a difficulty in the predictability of whether it falls into this timing period or the next timing period. However, we are very, as a management team, very, very optimistic about the long-term growth opportunities that avail our group, mainly because of the exciting possibilities in the sector in which we are servicing, both locally and internationally.
Thank you, Alan, for that. I was struggling to remove myself off mute. Michael, just moving on from that, and I think it touches on from a few of the questions that we got during the Q&A session just now, but Capital Appreciation has developed business relationships with a range of emerging Black-owned enterprises, and preferential procurement processes continue to receive emphasis at the company. Could you unpack a little bit some of the strides that you have made in playing a more meaningful role in South Africa's economic transformation agenda?
Yeah, excellent. Thank you, Ntokozo. So when one looks at how we unpack our business, our fundamental or major expenses are in the purchase of hardware and technology. Here we have limitations. There are no South African manufacturers or suppliers of the technology and hardware we need. And so there we partner. Our ambition and our aim has always been to partner with best leading enterprises in the world. And we are very confident of our relationships in that regard. Thereafter, we talk to occupancy and people. Occupancy is an arena where we don't own our own properties, but the related costs that come from occupancy, we try to manage as best we can and keep a lid on that. And everything else after that, we have had a very strong focus on how we can best partner with emerging enterprises, transfer skills, and support demographic infrastructure development in South Africa. Here, we've had considerable success. We're very proud of that. We're very passionate about that. Enterprises have been built around logistics, skills development, enterprise development, and this is an ongoing feature for us. And as you can see in our statistics, Alan might talk to some of the numbers, but it's an increasing element of what we do and a very, very powerful element of what we do, with absolute commitment from the board.
We are running a little bit out of time, and I'd like to get some of those questions that we still have in the chat to you guys before we let you go. So I think the last two questions, I'll put it both to you, Bradley and Ellen. Bradley, your part focusing on, Capital Appreciation seems to have not only been able to weather the storm, but really dance in the rain, it seems like it, compared to what other organizations are really facing during this pandemic. But Bradley, if you could just give us a little bit of insight of what are some of those material risks that you think the company might be facing in the immediate future that investors might need to be aware of or educated on? And then as a closing question to you, Alan, is just in a nutshell, what is capital appreciation's investment case? So for someone who heard nothing else this afternoon, just for you to close that out for us.
Okay, so I'll start with dancing in the rain. The best thing to do is have an umbrella. And we are very fortunate that we have a huge umbrella. We have an umbrella in the quality of the management that run the businesses, and that's where things start. We have a board who is a very well experienced board who've been through a number of business cycles over a period of time, running both small and large businesses. And we have a capital structure which allows us to focus on the business, not focus on how we're going to have money to pay salaries next month. And so from that perspective, we're very lucky. And you've got to make your own luck. And so it's not by accident that we're lucky. We just, I think, have three very important ingredients. The things that do affect us are the broader macroeconomic conditions, the political stability in South Africa, and our clients' willingness to continue to invest, because we obviously are reliant on that. I think that's the first thing. The second, and so far I think all our institutional clients are all blue chip clients who are in South Africa for the long term. So I don't think that that's a problem. Standard Bank's not shutting down tomorrow. ABSA is not shutting down tomorrow. Nedbank's not shutting down. FNB is not shutting down. Discovery is not shutting down. So I think in that regard, we have a very good mitigant against macroeconomic conditions, but they are a factor. The second is we do have some reliance on international supply. And Alan made reference to that. So there is a shortage of microprocessors around the world, and our devices that we import have microprocessors in them. To the extent that that presents an ongoing supply chain issue, we may have some supply chain issues that we need to deal with. But I think those are the two primary factors. And then there's obviously consumer confidence, because the consumer confidence is what drives the economy. And so I think it's sort of virtuous. We are hyper-focused on remaining relevant. So looking at new technologies all the time and making sure that we don't miss a technology cycle is an area where we spend a lot of our energy. And as Michael indicated, we have synthesis labs and we do something similar in payments. So I think that those risks are all existing. We can't get rid of them, but we can mitigate them to the best of our ability. And I think we've done a pretty good job in doing that to date. But we're ever vigilant, and although we are out on the curve in terms of innovation, I think the management team is generally a conservative management team in how we run the business. We're happy to be forward-leaning and innovative in our solutions. But when we look at acquisitions, when we look at investment opportunities, how we manage our cash flow, we are a traditional conservative team that's been through both good and bad times and understand how to manage through those.
And to just answer the question you asked about investment criteria when we buy businesses and capital appreciation's investment case, we believe that both are very, very aligned and correlatable. That when we were buying businesses, we would ask the same questions of the pending target acquisition as would be an investor who would invest in our business. And therefore, we believe that our investment criteria when we buy businesses and when somebody wishes to invest in us are totally aligned and compatible.
Thank you, Alan. Well, we have come to the end of the session. I think this hour really actually went by very fast. And since we started the session, we have a couple of questions that did come through. It's up to the management if they do have time to maybe answer one or two, but maybe just to go through one or two, and then the rest will just get Ane to make sure that we get those answers to you. The one question was, could management give an update on the rollout of Halo technology to other banks besides Nedbank? That's the one question that we have. And then we have another one that says, where can we find out more about your company synthesis and layup? And I think Ane did answer that on the chat on where. So maybe if we could just get that quick answer to round up our session on, can management give an update on the rollout of Halo technology to other banks besides Nedbank?
Yeah, so I think we answered that through the discussion, but I'm happy to answer it directly. We started with Halo as an exclusive relationship with Nedbank. The exclusivity period came to an end in May. Since then, we have signed up at least 4 other customers. They haven't announced those rollouts yet, so it's not publicly available as to who they are, but they are in the process of getting ready to launch those. And so there are 4 additional customers, and we continue to pursue opportunities for its rollout, not only in South Africa, but globally, with opportunities in Asia. And I mentioned we are going to be a participant in the Money 2020 conference in Amsterdam, which is happening in a few weeks' time, and are hopeful that that will generate a number of leads for us, because it is really world-class technology that is fantastic. So we're pretty hopeful that we will be able to, at our results, be able to announce the additional customers. We may not be able to do all 4, and hopefully we'll be more than 4 by the time we release our results in November.
Thank you so much, Bradley. And we do have some other questions that came through, but as I said to our investors joining us as guests today, Ane will take whatever questions we weren't able to answer today and get those questions to Capital Appreciation Management. Once again, thank you so much, gentlemen, for your time. This was really quite insightful and an enlightening hour for us.
Thank you for hosting us, to you and Easy Equities. It's a pleasure to participate in these, and I think you're doing a great service to small cap companies on the JSE, so thank you.
Absolutely, and I think to all the investors who joined us today, definitely do make good use of those vouchers that you get from Easy Equities. Maybe unpack Capital Appreciation a little bit more and see if it is your cup of tea to invest if you are sitting on the fence today. But I think most people who joined us on the call today are invested in Capital Appreciation already. And with that, I think we are out of time, and that's it for this time. Until next time.
Thanks. Bye-bye.
Thank you. Thanks very much.
Ciao, everybody.
Take care all.